Good night, everybody. My name is Juvenal, and I'm here to give you folks an update video on our NVIDIA chart. We have a ton to talk about, a ton to cover, and with so little time. So right now, I'm going to go over the monthly chart, the 2-week chart, the daily, and the intraday as I receive warning signals on the end of the day on Friday in the intraday chart that every investor has to be aware of. Okay, but before we put anything together, we have to put all the pieces of the puzzle together so people can follow along here. Even from the new viewers, everyone has to be aware of what's going on in the charts here. So let's dive right in. Right now, I want you to pull the monthly chart. We're on logarithmic over here. And right now, you could look at the right side. You could annotate all these levels, get your drawing tools out. And unfortunately, you won't be able to follow me on the Fibma indicator because this is a custom indicator. So it's not on TradingView, but you can see all the levels on the right side here for now. Okay. So follow me, bear with me here. So let's go back to the history of NVIDIA from the very beginning here. There's two special instances here. Here was your dot-com bubble, and here was your recession. Okay. But we know for a fact that every time we pierce the orange, hit it, or pierce it, kiss it, you get a massive pullback or it marks the top. Here you kissed it, mark the top. And here you went to touch the orange, you went to the blue, and then you reset it, you went to the new bull run. Here you went to the orange, you reset it to the blue, and you started a new bull run. Here you went to the orange, we never went back to the blue here. And then from there, things have gone south. Okay. There's been weakness. We never went back to the orange, and then we closed below our white line of our FIMA. And then if we zoom in closer here, you could see it's an undisputable fact that on November we had a reversal candle on the monthly. It's clear as day. You could see it. It's written on a piece of paper, black and white. You could see it. It's a reversal candle, undisputable fact. And then on April, we attempted to close above the white FIMA and we attempted to close above the reversal candle on November. And it's a fact we failed to close above both of them. Okay. And our thesis was this. Okay. This is our thesis. We need three things to happen in order for us to go to the orange line, which right now it's at $348.91. Okay. There's three things that have to happen. We need to close above the reversal candle of November. That's step one. We need to close above the white FIMA level. That's step two. Step three is we need to negate the negative divergence that we have here on the monthly chart. You can see as clear as day, high, lower high, lower high. And as price action, you can see we're making high, higher high, higher high. Here, let me take away the stochastic RSI for now. We'll get back to it. You can see it. High, lower high, lower high. As price is making high, higher high, higher high. When you see negative divergences like this, you will follow the indicator at some point. Last time we had negative divergence like this was in our bull run of 2016 and 2018. You can see the negative divergence here. High, lower high, lower high, high, higher high, higher high, and then we ended up having a fall. You can see that clear as day. So right now we're having the same story repeat where we have negative divergences in our chart. And right now we close below the Fibma. And right now we have a new candle fresh off the press right here on the monthly. And I'm going to bring in my drawings right here for the short term right here. And you can see we failed to close above the Fibma. We wicked it. We failed to close above it. And we also failed to close above the monthly reversal. I'm going to zoom in here. I already annotated it right here. Here is your November reversal high. And you can see clear as day, we closed below it. And then there's something in the intraday that happened that it's very oh so important that we will cover and we will get to it. But hold on tight, okay? Hold on tight. Right now, we have to cover, we're still on the monthly chart. What are the consequences of us not touching the blue when we had the correction here in the liberation sell-off? What are the consequences? As a logical thinker and as a logical trader, where we trade facts and just logic, because what we're trading in the trades in the charts, when we're trading patterns, we're trading human behavior, fear and greed. That's why chart patterns repeat time after time after time again. They happen all the time because we're trading fear and greed. Humans don't change. That's why we trade the charts here. That's why we trade just based on the facts. Okay. And we have to bring in logic into the table here. So my only logical conclusion that we close below here. This is confirmation along with the 2 week that we will get to shortly that the top is in. Okay, I know it's hard to believe, but right now, bear with me right here because we're gonna go over the 2 week chart and the daily that could conclude and add more evidence to why what I'm saying. But hear me out here. If we do get a correction here, right now my base case is we get a correction to the blue. History repeats that we should go to the blue. But this is the problem here. What if this is a bubble? If this is a bubble, then we will go to the purple, which right now our level is $62.30. But remember, this incrementally goes up over time. So the longer we stay up these levels, the higher this will go. Okay. But there is a possibility where we can get a retrace to the purple if this is an AI bubble. And let's say it's not an AI bubble. What if we get a recession instead? Then we could go to the purple here. You could see it in the history of NVIDIA. We have our recession, we have our bubble. Okay? That's also a possibility. But right now, my base case is we go to the blue here because we never hit the blue here. So as a logical thinker, first let's see if it goes to the blue, and if we get more negative signals, more bearish signals, or any sort of bearish pattern here, then that could give us more evidence that we could go to the purple here. But think about it this way as well. The consumer's already struggling. There's already many cracks in the underbelly of the economy right now. Okay. So, what do you think is going to happen if we get a lower asset prices? If the higher end consumer will what do you think they're going to be spending more, or they're going to be pulled back under spending? They're going to be pulling back under spending. The higher end consumer, if they have investments in the stock market right now, they've been spending like drunken sailors because right now the stock market's at all-time highs. But what do you think is happening if we get some sort of a pullback in the market? The higher end consumer will pull back on their spending, and then from there we can get a domino effect where we can go to the blue, and then maybe that could provoke the recession. Okay. But this is the problem when the United States has they're depending all their growth on AI. They have all their eggs in one basket. What do you think will happen if the AI trade alone pulls back when everything else is getting crushed out there? What do you think will happen? Now you're going to get the whole economy will slow down. That could provoke your recession. And if this is a AI bubble, which in my humble opinion it is, we should see a move back to the purple. But it doesn't have to be the 63 area. As in time goes on, this could incrementally go up higher. So that's also a fact as well that we could possibly go here based on the charts. That every time we get a recession, or if we get a dot-com bubble like this, if we're in a bubble, we get a correction to the purple. But right now, my base case right now, we have to go based on the charts. We have to be a logical thinker right now, and it's too early to conclude that we will go to the purple. Okay, that's true. We have to base everything on what we have now. Okay, so what we have now is saying that basically last time we had divergence like that was back here in 2016 and 2018. We had negative divergence where we pulled back to the blue. So far, we have to think right now that we gotta think that we're gonna go to the blue. It's too early to say that we're gonna go to the purple. There's no facts right now that says that we're in a bubble right now, just based on my experience in trading history, and when I see in the charts and when I see other patterns as well, usually this is the price action that we're seeing in all these charts is absolutely insane. This is bubble level territory. That's why I'm saying that, in my humble opinion, we are in a bubble. Okay. But right now, we have to respect the charts. We have to take things one step at a time. Right now, we failed to close above the FIMA. We failed to close above the reversal, and we have negative divergence, which leads me to believe we should go to the blue. We could correct to the blue, and hopefully, we can get another bull run move back up. But like I said before, with the other factors, with the problems in the underbelly of the economy, the consumer is already struggling, and the stock market starts to pull back in that size of magnitude, then the higher end consumer will also pull back on their spending, thus slowing down the economy, and we can have a domino effect. And then if that happens, then you know what I'm talking about. Okay. But right now, my base case, I'm calling for a pullback. Okay, I'm calling for a pullback to retest their former all-time highs and possibly go to their blue. Okay, That's what I have right now. And there's a couple things that have to happen before we even get a crash, which I will get to later in the charts. But right now, I'm not calling for a crash. I'm calling for a pullback right now. Okay. But let's go to our next piece of evidence, the 2 week chart. So let's get rid of our FIMA. Let's get rid of our FIMA. Let's get rid of our logarithmic. Let's go to regular and let's get back our drawings right here. Okay. So now, ladies and gentlemen, I introduce you to you the topping tail right here slash gravestone doji. So what makes a topping tail in a gravestone doji? Okay, so this is great educational content right here. So a gravestone doji is a massive wick with no body. So you get something like this. But in this case, we do have a tiny body, okay? We have a tiny slight body. It's slightly visible. You can see in the green, but that's why I'm calling it topping tail slash gravestone doji. Okay, because gravestone dojis are the worst of the worst reversal candles. Those are like the worst you can get. Okay, last time we saw something like that was in Bitcoin. Okay, let's go to the Bitcoin chart. Okay, so I could show you evidence of the chart, and it was in the higher time frame as well. So let's go to the 2 month chart. You could see it here. We had something similar like here on this high, and we had a 33% correction, if I'm not if not wrong here. Yep, 33.57% correction. And then you can see here, it's normal. You can have retraces. You can have a retrace before the move happens, before the pullback happens. You can see here on the all-time high, we had that same kind of candle formation over here, and actually we even made a new high. We made a new all-time high here, but it was a massive fake out right here. You can see, so it's normal to have when you get massive reversal candles like that, like the more stronger reversal candles, it's normal you get 50% retraces. Bullish engulfing candles, topping tails, doji candles, those are reversal candles on the highs or on the lows. When you get bottoming tails, same thing. You get those bullish engulfing candles, you get 50% retraces most of the time. So here you got more than that. You got a new all-time high. So it's possible you can even make a new all-time high. So we have to take that into consideration when we're looking into the 2 week chart on our NVIDIA chart here. So let's go back to our NVIDIA chart as we're running out of time here. You can see, so it's possible that we could get a retrace, a 50% retrace. And if you look, it coincides with the top part of our blue rising parallel channel right here. So we could get a retrace here. That could be where I could add the half I first took off here. But really, I'm going to be eyeing this red trend line over here. And I'll show you where I got this red trend line over here. So this is where I'm going to deploy my other half that I took half off at in the money over here. I'm going to redeploy that half if we ever retest this high or if we make a pierce or make a new all-time high. But I'm going to show you that trend line right now so you can have it right now in the charts. So if you connect the high from November 22nd, 2021, we're in the 2 week chart here. And if you connect the high here from October 27th, it actually predicted this high over here. And you can see where we got the pullback over here. So here, this is going to be a massive line of resistance because it's a long dated trend line. The further it goes back, the stronger the resistance is. You can see here was the bear market. Here you had a pullback. Is this the top where you can have a start of a bear market, or is this just a pullback? So for now, this is a top until proven otherwise. In order to negate this candle, we need to get a 2 week candle close above the wick here. Okay, so if we can get that, then that can negate this topping tail, which can negate the top here on the 2 week chart that the signal is giving us in the 2 week time frame. And look at this, we had a 3 bar surge and we got a reversal. Okay, that's typically what happens with 3 bar surges or time counts of 7 or 10. So this is very important. This is very important that we keep track of this. So keep this on your 2 week chart. So right now, let's go to the intraday chart as we're running out of time here. So right now, we do have a parallel channel here. Right now, I took it off so we can make our chart cleaner. But if we connect the low from March 30th and you connect the low from May 4th and you connect the high here from April 27th, you get this beautiful parallel channel that also marked a resistance over here. We pierced it and we got rejected here. And you can see this. Look at this. Look how price action reacts to it. Bounce, hit resistance here, You try to attempted the bounce here. We called for a bounce here in our previous update video. So go check out those previous update videos there. And we did call for a bounce here as we hypothesized that money rotation is happening from the lower risk asset of Nvidia to chase the higher risk semiconductors. So and then when we saw the higher risk semiconductors pull back, money came back to Nvidia. Thus, we had a green candle over here and we had a wick here. That's why we took profits over here as it coincided with these lower pivots as well over here. Go watch those previous update videos with more description right there, as there's more details. But right now, we got to study the intraday chart right here. This is so important. So look here. We closed below, or we were trading below the rising parallel channel right there. We hit it, we got rejected. We hit it, we got rejected. And look at the end of the day. And look at the massive volume that we had at the end of the day. This is institutions giving signals to each other. And it's no coincidence that we closed below the monthly reversal candle. So this is the monthly reversal high candle right here, this level on the yellow. That's where we were seeing in the monthly chart. We closed below that price action. They forced close below it. This is a warning signal that every investor has to be aware of. This is no coincidence. This is no coincidence that these things are happening. And look at the volumes that we had in the daily chart. See this? Okay, so this is what I'm looking for now. First of all, we have to address that this rise in parallel channel is minor. Why is it minor? Because it's shorter time frame. It's not like we had this, like it's not compared to this. You can see here. Let me get rid of this volume to make the chart cleaner. It's not like this longer term parallel channel where we go back and connect these pivot highs over here. It's not as important as this longer term one. That's why this is a minor. So it's okay if it pierces. It's okay if it fails. It typically would fail. But right now, I'm gonna look for one thing. I'm going to look for confirmation. So right now, any close below $208.78 would confirm the breakdown of this yellow parallel channel. And if we do confirm and break down there, then I'm afraid we will go back below the blue bottom part of our blue parallel channel, as there is a gap right here. So there's two technical areas of support. The lower band right here of our upslope parallel channel, and the technical gap fill right here at around $178.34. But the problem is that this is minor support. Why? Because we've hit this multiple times. You can see one time, two times, three times, four times, five times, six times, seven times. We closed below, we confirmed, and then that's where we started a short, and that's where we called for a crash here and made the more logical sense to call for a crash there. Why? Because we had typically when you get crashes, this is what happens. You get you get a down move first, a corrective move down first, then you get some sort of consolidation, and then you get capitulation. That's how crashes form. So here we had a down move, sideways consolidation, a bearish pattern. We then close below and confirm. It made sense to call for a crash here, but it didn't end up happening. And I'm here to tell you I was wrong. I admit I was wrong there, but guess what? If we go back down here, we get a corrective move down here, and we get some sort of bearish consolidation, or we get some bearish pattern here, and we close below and confirm, then the crash is back on the table where we could go back and correct to the FIMA, to the blue line of a FIMA. Right now it's at $124.61. And there's also gaps over here that never came back, that never got filled. In a technical analysis, gaps are meant to be filled at some point. We don't know when, but at some point in technical analysis, I see them all the time. Gaps are meant to be filled. So it doesn't mean it has to go down there, but right now the probabilities that we fail to recapture on the monthly, and like we stated before, our monthly thesis, like we stated before, we for us to go back to the orange, we need to close above the monthly reversal candle in November. We need to close above the FIMA. We need to negate the negative divergence on the monthly chart where we have negative divergence here. We haven't negated none of those factors. And now we have a topic tail slash gravestone doji on the 2 week chart, and then we're seeing bearish price action in the daily chart as well. There's nothing bullish about this, guys. Look, believe me, if I try to find bullish stuff here, I'm gonna try to find bullish stuff, and I've been very clear and very honest about you guys as I'm just trying to help people out. And I did call for a bounce here, and that was a bullish thing. It's not something that favored my short, but I called it here, and I said it. You could look at the previous update videos, and I said here we could probably have a bounce here. We're due for a bounce here, and look at the charts here. If we look at the stochastic RSI, we're due for a bounce here, as every time we go down here, we should have a cross back up. My guess, if we are going to have a bounce here, we're going to probably retest the upper band of the blue parallel channel, or test our upper band at the red channel, long term right here, this long term line that we had, going back over there since 2021. I'm going to redeploy right here. If we, the other half, I took half off here, I'm going to redeploy right there, and I'm going to be considering buying long-term puts here. Okay, so this is what I see in the charts. Every investor has to be aware. Please be aware, and don't chase the hype. Follow the charts. Everything is in the charts. Okay, I'm running out of time here. I wish I could talk about more. I'll have to make another video later.